Hello, everyone. Welcome back. I am not a lawyer, but I learned what was at stake. The fact that relationships with the board were not being made clear. Everything has been made public, and now we're having a vote. It seems more difficult than I thought it would be. $2,600 a share. Then, please help us with the math. What needs to take place for all of that to happen? Our price goals are all set for 5 years, so this one is too. What's needed is a base for self-driving taxis like Tesla's platform, robo-taxis, which works like SAYs instead of just offering cars and software. This turns into a steady way to make money, a very large cut of every mile driven on that network of self-driving taxis. Investors in Tesla can now look forward to a better future in the coming weeks. Tesla's stock price will be affected by several things. On June 30th, production and shipping numbers will be made public. This is a very important event. How important is this going to be, and what might it mean after the earnings report in mid-July? On top of that, everyone is looking forward to the highly awaited robotaxi event on August 8th. Today, we'll also talk about Cathie Wood of ARK Invest and her prediction that Tesla's stock could reach $2,600 by 2029. We will talk about the future of robotaxis, and finance analyst Larry Goldberg will join us to make a difference in these areas. Don't forget to hit the like button and subscribe to Tesla Stock News before we start. A lot of people think that the recent vote has taken a big weight off of Tesla's price, which Dan Ives says could make it worth $20 to $30 more. The stock has gone up a lot, and it's thought that this upward trend might continue. But there are still a lot of unknowns, especially about upcoming court decisions, which make it hard to predict where the stock will go in the future. The most recent data from May shows that sales have started to rise again in China. After a time of stagnation, this rise is notable, giving investors hope about Tesla's performance in one of its biggest markets. But it's important to keep things in perspective because these numbers only show a snapshot and not a clear trend. When we look at Europe, things become more complicated. Sales are falling because Germany took away rewards for EVs, and there are other problems with the rules. The Model 3's planned tax changes, which will be in line with China's new tax, are likely to make it harder for Tesla to do well in the European market. In light of the mixed signs from China and the problems in Europe, Larry Goldberg asked, "How do you think these things will affect Tesla's stock in the near future?" Because of the way the market is right now, Tesla's long-term prospects depend a lot on how well the company can handle these legal and market problems. Tesla is at a very important point right now, and how well it can adapt to these changes will likely have a big impact on its future. The European market has some unique problems, like regulatory hurdles, that make it hard to sell electric vehicles. Even with these problems, there is some hope for recovery because new reports show that China's numbers have gone up. Even though the conversation briefly shifted from cars to robots and AI, production and delivery measures are still a big part of how much Tesla's stock is worth. Larry says he will always be committed to Tesla, not just because of how well the company is doing now, but also because of Elon Musk's innovative leadership and projects that look to the future. This long-term view is different from the short-term changes that happen quickly in response to both good and bad news. As we get closer to Tesla's earnings report, which is usually released in the third week of July, there are a lot of hopes and worries about the company's financial health. This quarter, analysts think that profits will miss, but not by a large amount. Based on what we know now, profit may drop below 80 cents per share. This number shows a big drop, which suggests that 2023 might be a year of reorganization with a focus on long-term strategy changes rather than short-term profits. This expected drop in earnings is mostly because of how well Tesla did in key areas like China and Europe. In China, the market is still uncertain, even though sales have been showing signs of improvement recently. The rise in sales in May is a good sign, but it's too early to say for sure that things will keep going up. Investors and analysts will be keeping a close eye on this turnaround over the next 3 months to see if it can last. Europe is a more difficult place to be. Sales are likely to drop even more now that EV discounts have been taken away and taxes are going up on models like the Model 3. These changes to the rules could cause Tesla to miss its production and delivery goals for the region, which would have an effect on the company's total financial outlook. Beyond the immediate earnings report, Tesla's future seems to be closely linked to its planned events, especially the highly anticipated robotaxi event on August 8th. People expect this event to give them a sneak peek at Tesla's next wave of technological advances, but it's still too early to tell how well this showcase does and how it affects stock prices. In the past, Tesla's stock has gone down when new technologies were seen as too far in the future or not instantly useful for making money. ARK Invest's most recent report suggests that Tesla's stock could hit as high as $2,600 by 2029, mainly due to the growth potential of robotaxi services. This hopeful prediction depends on robotaxis being able to be used and expanded successfully in the next 2 years. ARK's analysis, which is known for using a lot of different simulations and probabilities, says that this goal has a 50% chance of being reached. Even more conservative predictions still put the stock much higher than it is now. At the same time, financial experts are paying close attention to ARK Invest predictions because they are very positive about Tesla's future. ARK Invest thinks Tesla's stock could go as high as $2,600 per share by 2029, which is their bull case target. When you compare this estimate to others from the same time frame who are more pessimistic and think the stock might only hit around $2,000, it stands out. ARK is optimistic because they think that Tesla's robotaxi projects and the wider use of self-driving technology will be very successful. They say that these new ideas will change Tesla's business plan and make the company much more profitable and bring in a lot more money. This positive prediction comes from a lot of complicated studies and models that look at how technology and markets will change over the next 10 years. But some critics and cautious experts doubt that such fast progress and market adoption is possible. They say that many technological, regulatory, and operational problems could slow down the rate of growth and adoption, which could lead to a lower valuation. The differences between these statements show the different levels of doubt and speculation about Tesla's ability to lead and profit from the revolution in self-driving cars. When looking at the robotaxi project, ARK's models show that Tesla will probably start its robotaxi service by 2025, 58% of the time. Some people, though, think this chance is too big because there are still a lot of operational problems that need to be fixed. A launch in 2026 is 38% likely, a launch in 2027 is only 4% likely, and there are almost no hopes for launches in 2028 or later. This timeline shows that experts and other important people have different ideas about how to smoothly and quickly roll out such a new technology. For example, the idea that Tesla would instantly start offering robotaxi service across the whole country is pushed back by more cautious predictions that say the first commercialization would probably happen in a more controlled, localized pilot setting. It is more in line with normal operational strategies to use advanced technologies in the real world with this method. People are arguing about what commercialization means, how big of a scale these services should be to be considered effective. Some people might hope for a nationwide rollout, but in reality would probably be more practical to start slowly in a few cities or areas. This way, any operational problems can be worked out before the rollout goes nationwide. The optimistic view from Arcade is different from the more realistic view of other experts who think that the robotaxi service will be a big step forward, but that the initial rollout may happen more slowly than RK says. By changing the odds, they might argue for a higher chance in later years like 2026 or 2027 because getting to full operating capability could be hard and take a long time. As Tesla continues to learn how to deal with the complicated world of self-driving cars and robot AI, the predictions for its future are both interesting and wide-ranging. Tasha Key from ARK Invest has released a new model that suggests self-driving cars could be one of the most important advances in AI, having a huge effect on Tesla's business and its owners by 2029. Based on ARK's research, robotaxi sales could make up 63% of Tesla's total sales, with 86% of the company's expected profits going to this section. This would account for 88% of Tesla's expected $8.2 trillion enterprise value. The detailed breakdown of income also includes sales of electric vehicles, energy solutions, and insurance, but the robotaxi service is what really stands out. Some experts agree with this big-picture view. They think Tesla will make tens of millions of cars, mainly for the robotaxi market, which could eventually replace traditional car ownership. However,